Greetings everyone, welcome aboard. It's July 28th, 2010. My name is Joseph James. Welcome to our live stream recap brought to you guys by theschooloftrade.com. Before we talk about the trades we took today, guys, I want to remind you guys of the blog. If you're watching the video on the blog right now, use the search box. We've got live support 24/7. You can find us on YouTube, on Facebook, and on Twitter. And don't forget, guys, on the blog right now, we're posting brand new trade calls, articles, videos, guys, 3, 4, 5 times a day. There's going to be great stuff posted on the blog, and if you're following the blog, then you'll always get the most accurate information right when it's out. Now, if you can't follow the blog, just join the newsletter. The newsletter link is right below the follow me button there. So join the newsletter, follow the blog. That way you guys are always up to date on all the new information as soon as it's listed out. All right, guys, another big day today. Boy, I'll tell you, we continue to keep pushing through these choppy, sluggish summertime months, and, well, it appears there's a negative correlation here between the volume and our profit and loss, right? We seem to be doing better as the summertime continues to kind of stumble through, right? So July and August until that first week in September, we're trading summertime markets, guys, and we continue to have better results every single day. Now you can see here, guys, 262 ticks, 2468 total trades. We, of course, took some on crude, gold, the Russell. We tried to get the euro taken today, but the dollar kind of made it more difficult than we wanted here in the euro. As you guys can see, though, guys, 6,300 for the week, 633 ticks. Guys, we've only been 3 days this week, right? 633 ticks this week, guys. Incredible. And that brings our monthly total 28,000, right? And, of course, right, pop the champagne. We've now finally hit our $100,000 here for the month 2010. Now, my goal was to get all you members out there $100,000 by the end of the year. Well, here we are. January, blah, 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 carry the 1, follow the 3, dot the I. Hey, we've still got 4 months left. This is great. So we're obviously going to well exceed our goal of 100,000. Right, and that's, of course, only on 4 contracts. Let's keep moving. We'll keep you guys posted the rest of the month, though. We're having a great summertime here in the trade room. Now, guys, what's the most important thing that happened today? Well, very slow at the open. As you guys know, trading summertime months, we're going to be up and down with volume, right? We look for the news events to kind of spark the volume in the market, and then we look to trade along with it. Now, one thing we noticed here was very narrow trading ranges compared to yesterday. Right? Yesterday, we saw this big wide trading range. This morning, we woke up and we were right here, right? Very narrow trading range. We also noticed we had a dollar index wedge pattern. Now, a wedge pattern on the dollar, in a second look at it, that wedge pattern, guys, that's going to keep everything contained. Remember, the dollar is the fundamental market that will move everything else. Now, if you want more information about dollar index, go to the blog, type in dollar index, or go to Trade Room Resources on the blog and click on the link that says dollar index correlation. Okay, so there's lots of free information on our blog, and the link for the blog is right below the video, or you might be watching the video right now on the blog itself. All right, guys, so go to Trade Room Resources, and you can learn all about the dollar index there. Now, we noticed crude in a very narrow wedge as well. So crude inventories, crude oil had the inventories number at 10:30 today. So Wednesday morning, crude inventories at 10:30. We were expecting the crude market to be a little bit restricted until that 10:30, and then all of a sudden, it should get nice and volatile for us. We had gold testing its quarterly lows from back in May down at 1156, but it never got the job done. So we had crude kind of sitting in a sideways wedge. We had gold kind of, playing monkey business down around the lower end of the range, right, back from May. And, of course, here we are now with the dollar. And the dollar's sitting here in a sideways wedge pattern. Now, guys, we already know that a wedge pattern, right, wedge pattern, of course, is going to look something like this, right? We already know a wedge pattern looks like this. And we know, of course, we're going to avoid trading in the middle of the wedge pattern. We'll look for breakouts to the downside or breakouts to the upside. Now, remember, this is the dollar. Okay, so the DX has a negative correlation to this. So if I see my dollar break out below this wedge, that means everything else I'm looking for a long trade. Okay, so remember, it's going to be a negative correlation. Okay, so we'll get a wedge pattern on the dollar. If we break above the wedge, I'm looking short. If we break below the wedge, I'm looking long. All right, guys? So that was the first thing we saw right away. And as you guys know, since everything is settled in the dollar being contained in this wedge pattern, it's going to cause problems for us. Okay, so that was really the only reason why we didn't make 6,000 ticks today, was because that darn dollar wouldn't give us enough trading opportunities because we just simply couldn't break out of that wedge. Now there's more to come. We actually ended up breaking it below the 82,200, but that of course will come on a little bit later on this morning. Over to the euro continues to have a problem here with this pennant pattern. Now this is what we call a flag pattern or a pennant pattern, and it looks like this. And basically the way the flag pattern works, the pennant pattern is that you've got price action that's doing this, right? It's consolidating up towards these highs. And so what you're seeing here is you've got your swing high up top here, trend line down bottom here, right? And there's your pennant. So of course what we'll do is we'll mark up a swing low here, right? Mark that swing low right there, and then take the break below that swing low for a two-step pattern short, or break above the highs here for a breaker pattern long. But as you can see though, guys, right, the pennant pattern, there's your high, right? There's your low. And so of course now we've got this pennant pattern here that's getting very tight right around the big round number of 3,000. Okay, so big round number, psychological level. Remember, the dollar was in a wedge pattern. So with the euro trading around the 3,000 level, right, big psychological level, probably the biggest one on this euro chart we've seen all year, 3,000, right, 3 zeros, not just 2. So of course 3,000, big psychological level, plus we have this darn pennant pattern happening, and don't forget the dollar, right, in the wedge pattern. So that made for a mess on the euro trade this morning. Didn't get much out of the euro today, didn't take any trades on it, and you can see why. Okay, now on crude, here's what we looked at crude. Now the crude market, very similar to what we've seen before here. Now before, follow me down lower right hand corner here. Now here on the crude you'll see a couple things here. Now here was the trading range from yesterday, and here's the trading range for today. Now what I want you guys to notice is that, follow me back up top here in the upper left hand corner here, right? This was the trading range we saw yesterday before the 10 o'clock news. So now what does this tell me here, guys? What does that tell me here? Well, it reminded us this morning that even though we had, right, tight trading ranges here down bottom, even though we had tight sideways ranges here, okay, we should expect, once we get that news this morning, we should expect this thing to really develop, okay, because it's exactly what happened yesterday. Okay, at 10 o'clock yesterday morning, we had only from 69s, right, down here to 80, all right? So that's going to be, what, about 100 ticks, right, 90 ticks. Okay, then of course we explode the downside there after the news. Same thing is true today. About 90 ticks of range, okay, between 74 and 79, right? About 100 ticks of range there. Same as we saw on Tuesday morning. So great learning example there, guys. Don't be afraid to look at, right, something outside, okay, previous days in your fast chart and see what it looks like, right? Pay attention to the trading range. So again, we noticed right away we had narrow trading ranges on the crude. But we had kind of a light at the end of the tunnel here because we knew, right, what we saw yesterday. Yesterday we saw the same thing. So we should see it, of course, develop into a much bigger trading day today. All right, and we got just that. We definitely did. Now you can also notice here, guys, back on the big chart here, this is my 34 range. Okay, now a 34 range, similar to a 12-minute to a 15-minute chart. Okay, so it's going to be a pretty slow chart here. And what do we see? We've got your wedge high. We've got your wedge low. Right, and here we are right at the bottom here of the wedge pattern. Now, one thing I want you guys to see here is, right, is that we had marked up multiple trend lines here, right? See these multiple trend lines? Now, these multiple trend lines, right, 1, 2, 3, these actually came, right, from your swing lows. Swing low right there, swing low right here, and the previous one was from a swing low a couple days ago. So we had all these trend lines here, 1, 2, 3 trend lines. And so when we saw the wedge pattern, what do you think we thought? Right? What's our plan of attack? My plan of attack is I'm at the low of the wedge, so I'm going to look for a breaker pattern or a two-step pattern long above 78. All right? In fact, the level we were looking at specifically here is actually going to be 77.80. You can see right there, we actually put our price alert indicator there at 77.80. And then down below 76.90, that'll be our short option. Okay, so we pretty much knew by looking at crude here exactly what was going to happen today. I'm going to break above 77.80 and get my two-step long, or I'll get below 76.90 and we'll take a breaker pattern short. All right, and didn't last very long. You see, it just broke out here, so we began looking real quickly here for a breaker pattern short. But what I want you guys to see here, though, is first of all the trading range. Okay, smaller than yesterday, but we had a light at the